Hey everyone, and welcome back to This Explainer. Today, we're jumping straight into a topic that honestly has the power to either totally build your future or completely derail it. We're looking at Finlit Zambia's Module 1.2, which covers credit and debt management. I promise you, by the time we wrap up today, this breakdown of how credit and debt actually work is going to fundamentally change how you view money. So, let's just dive right in.
I want to kick things off today with a story. This is the story of Grace Malenga. Her mother fell terribly ill, and the family urgently needed K2000 for hospital treatment. Now, panicking and really pressed for time, which is a totally understandable emotional reaction to a crisis, Grace went to a microfinance institution that offered same-day approval. Desperate to help her mom, she signed the paperwork right then and there without ever checking the interest rate. And well, that set off a massive financial time bomb.
Let's walk through the horrifying math of 15% monthly compound interest. Month 1, her K2000 becomes K2300. Month 2, it hits K2645. Month 3, K3042. Month 4, K3498. Month 5, K4023. And by month 6, Grace owes K$4,626. You guys, in just half a year, that initial K2000 loan literally more than doubled. So the absolute crucial takeaway here is this. Always calculate the total amount you're going to pay back before you sign anything.
So to avoid Grace's nightmare, we really need to understand the foundational types of credit we have here in Zambia. First up, secured loans. These are backed by collateral. Think like a car or a house. Because the bank has that safety net, they offer lower interest rates. But the immense risk? If you default, you lose your asset entirely. On the flip side, we have unsecured personal loans. No collateral required, but because the bank is taking on way more risk, they charge you much higher interest, usually sitting right around 25 to 35% per year at the commercial banks.
And then we wander into some pretty dangerous territory: microfinance and hire purchase. Microfinance loans offer that super fast approval, but as we just saw with Grace, they can hit you with a staggering 15 to 30% interest per month, not per year, per month. Hire purchase is another tricky one. It lets you buy things like furniture or a TV in installments, but it often hides devastating fees right inside those seemingly manageable monthly payments. Again, you have to calculate the total amount paid before you agree to any installment plan.
Now, what's really interesting about this slide is looking at the big picture of why borrowing costs what it does. As of February 2026, the Bank of Zambia's monetary policy rate, basically the baseline cost of borrowing in the country, is at 13.5%. Commercial banks will lend at roughly 14 to 15 percentage points above that, which brings their average to around 28% per year. Having this context really helps you appreciate the true underlying cost of any commercial loan you might be looking at. Which naturally brings us to the organization that keeps an eye on all of this: the Credit Reference Bureau, mainly TransUnion Zambia. You can kind of think of them as the all-seeing eye of your financial life. They track every single financial move you make, keeping a permanent ongoing record of your borrowing and repayment history.
So, what exactly goes on that record? Every single loan you take out and every single payment you make or miss. This is absolutely crucial because it dictates your future financial reputation. It impacts your future loan approvals, your interest rates, and get this, even your employment and housing prospects. But here's the good news: you have the right to know what's in there. You're legally entitled to one free report per year. You just call them at 0211-220-530 or shoot an email to customercarezm@transunion.com. You just submit your NRC with a request form, and it's yours. Take control of your data.
Okay, but what if you already have debt and you need to get rid of it? We've got two main strategies here. First is the debt avalanche. This is where you target the loan with the highest interest rate first. Mathematically speaking, this saves you the absolute most money. Your second option is the debt snowball, where you target the smallest balance first. This gives you those quick psychological wins to keep you motivated. The catch? Both strategies require you to keep paying the minimums on all your other debts, no exceptions, because, as we know, a missed minimum damages that CRB record we just talked about. So, pick the method that fits your personality.
And applying these exact strategies effectively, that is the exact mechanism you need to clear phase 1 of your financial literacy journey. Once you truly master how debt works and you know how to aggressively eliminate it, you completely unlock the ability to start building and protecting real wealth. All right, time to test what we've learned. I've got 5 quick quiz questions for you. I want you to literally shout out the answer wherever you're sitting right now during the pause, okay? Question 1. Grace borrowed K2000 at 15% monthly compound interest. How much does she owe after 6 months?
Got it?
It's approximately 4,626. Just a quick reminder, the math here is terrifying because that loan more than doubled in just 6 short months. Question 2, let's keep this energy going. What exactly does TransUnion Zambia record? Think back a few minutes.
They record all loans taken, every single payment made or missed, and defaults from every licensed lender. Remember, this is the permanent record that shapes your entire future financial reputation.
Question 3. How do you practically access your credit report from TransUnion Zambia? Let's see if you remember those contact details.
By calling 0211-220-530 or emailing customercarezm@transunion.com. You just submit your NRC with a quick request form to claim that one free annual report you're legally entitled to.
Moving on to question 4. Of the 2 debt elimination techniques we covered, which debt strategy saves the most money mathematically? Shout it out!
It's the debt avalanche. Because it relentlessly targets the highest interest rate first, it absolutely crushes the math in your favor.
And our final question, question 5, just to anchor your understanding of the macroeconomic environment, Zambia's average commercial bank lending rate is approximately how much per year? What was that average?
It is approximately 28% per year. That average sits roughly 14 to 15 percentage points right above the Bank of Zambia monetary policy rate. And this brilliantly illustrates our core philosophical takeaway for this entire module. As the quote says, debt is not shameful, but ignoring debt is dangerous. The goal is to use credit as a tool, not a trap. Compound interest can completely work for you, or it can trap you just like it did Grace.
So, I'm going to leave you with this final provocative thought. You now know the real math behind compound interest, and you know the exact strategies to defeat it. So, how will you use this knowledge to protect your family's future today? Think about that. Take these tools, get out there, and start building your financial foundation. Thanks so much for joining me on this explainer, and keep learning.